massive, massive move that we've seen in the price of gold is kind of right now playing the ultimate role of the anti-US trade, right? As people sell dollars, sell US treasuries, sell US stocks, gold is playing the ultimate role of the anti-US trade. Now, I'm not, actively wanting the US to fail. I'm proud to be an American, but it's not about that. It's simply that's the flow of traffic right now. The flow of traffic is people are worried about what's happening in the U.S. and the government of the United States. If you're looking from the outside looking in to the U.S., you're like, gosh, I don't know, like everything is changing over there. They're practically declaring war on a whole bunch of countries through the trade war. And people might just be a little not willing to deal with that. So they're moving to things like gold. That seems to be, at least the read I have on it from a real simplified version. There's a whole lot of uncertainty about what the future entails, and people look for alternatives, right? I'm long gold, not because I think the US is going to crumble to zero. I'm long gold because the dollar's uncertain right now. We've had some mixed economic data points. Fear is very high. Uncertainty is very high. I bought this thing on a pullback, and it continues to get a very bullish reading within my system. So even if I'm, pro-American, I think it's going to work out, whatever, put that to the side for a second and just trade the environment that you're in. I think a lot of people are going to get themselves into a lot of trouble this year on both sides if they let kind of their biases completely dictate what they think about this market, right? I like gold for a number of reasons. I'm super long-term bullish on metals, but I like them especially right now because institutional money has been flowing heavily into gold. I can show you that. Like, that's not something I'm just saying that sounds cool. We can see it in the the Commitment of Traders report. Take a look right here. What we've got is the COT data history, right? And you can see the blue bars are the long positions on the futures contracts, and the pink or red is the short contracts. What do you notice about this? And this is non-commercial COT data. This is hedge funds, small banks. This is smart money. What is smart money doing? Smart money is heavily leaned long on gold. What about silver? I bet you it's pretty similar on silver. Yep. Silver and gold, we have heavy net accumulation, bullishness from institutional players when it comes to silver and gold. So what do I do with that? Well, I'll tell you one thing it does is it's factored into the top setups algorithm that if that is the case, we get positive scoring, we get bullish readings for gold, etc. Right? Now, that's not the only thing that we look at. We also look at economic data reports and technical data. By the way, quick little plug, we added this new feature. It's called the Top Setups Sentiment Only tab. So if you're somebody who really doesn't care too much to track economic data, for example, you can actually select only economic data or only sentiment data from our top setups algorithms that we just added. So in this case, you can see sentiment score is crazy, crazy bullish for gold. It's our most bullish reading on sentiment and on the top setups overall fully inclusive version of our algorithm. So we're getting very bullish because, again, COT data is incredibly bullish. Put to call ratio is actually showing a lot of people are buying puts on gold, interestingly enough. Right? We could go take a look at that just to study what we're saying there. Let's pull up the gold chart for the put to call ratio. We can still see some pretty heavy bearish bets on gold, which I think is really interesting. So anyways, when we're looking at gold, right, when we're looking at silver, the top setups page, this is really the core reason for why I have been bullish on gold. Another reason that I really liked gold going into this part of the year is because it was this part of the year, and we can look at the historical tendencies of the first quarter into the second quarter of gold, right? That's something that we can track. Why wouldn't we do that? We should. We've selected gold on our month-to-month seasonality chart. And what we can see here is that in the last 10 years, in blue, we can see the 10-year historical average during these months of the year for the price of spot gold. So January through April, this period of time in the last 10 years has been an abnormally strong period for gold. That was part of the reason why I went long gold, right? And that has been a really, we got way more than we bargained for. Look at the performance this year on gold. We had February, which was pretty much flat, but March and April and January largely exceeded expectations. We're having some insane moves for gold this year. These are way better. Like I expected, or I didn't expect, but I was thinking, making an educated guess that we could see a positive period during this year, but we got way more than we bargained for. So seasonality looks good. The commitment of traders data looks good, right? All of that said, all of that combined, right? Retail positioning through the put to call ratio, the momentum to the upside, PMI data coming in soft. These are the real reasons why I took that trade. It's not because the technicals just looked perfect. That's not why I took that trade. The trade was because sentiment, seasonality, economic data, momentum, all of these factors played a part in setting up the trade. Then the technicals were kind of the last domino, right? Pulled back to a key level, the 61.8% retracement. And to be transparent, I took an initial attempt at the 38.2% retracement, and I stopped out, took a loss, took a second entry at the 61.8% retracement, and that's the level that really took off and has kept going. I've since just trailed my stop loss further and further into profit on this trade. It's been a pretty crazy trade. I wish I had more that looked like this, really. So that's the full breakdown on that. If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses and much more.